Alrighty, guys, let's get into this.
On the NASDAQ 100. That company reports earnings right here on Overtime on Monday. But joining us now ahead of that is Dan Ives from Wedbush. Before I get to Palo Alto specifically, just got to ask about the rally we have seen in tech. It was the strongest sector today, and it's really been leading this turnaround, this rebound, after we did see a pullback in the S&P and a correction in the NASDAQ.
It's a golden age for tech. I mean, in my opinion, we are just in the early stages of a bull market. And if you look at what we've seen from AI revolution, just from broader tech, it's been strong from an earnings perspective. And the growth scare that we saw, it's just a bump in the road to what I believe is really this fourth industrial revolution playing out. And that's how we've handheld investors through this. This is the time to own tech. And I believe it's really just the start, still 9 p.m. in an AI party that we believe goes to 4 a.m.
We're in an election cycle. We're already starting to see some of the signs of cybersecurity issues and hacks as we do move closer to that November election day. On the flip side of that, we saw the debacle with CrowdStrike a couple of weeks ago as well. So how does that position us for cybersecurity earnings when we do have Palo Alto kicking them off on Monday?
Yeah, I actually think as a subsector, it's one of the strongest ones to own. And not just into year-end, but into early 2025. In terms of what we're seeing in more and more movements to the cloud, cyber is actually benefiting. Names like CyberArk, Checkpoint. I think Palo Alto, it's actually one of our top names the last few years. It's a table.
So there's one big issue with all these stocks, DNI, speaking out here, and the one big issue is valuation. Valuation on all those stocks is insanely rich. Even CrowdStrike, after that massive crash in the stock, look at the trailing 12-month P, look at the forward P, even go to the 2-year forward P of those stocks. They trade very, very rich.
In our opinion. This is a name where I think glass half empty still on the street. But now they're going for platformization. And I think when the Cash and the team are doing, they're going to gain more and more share. And even when you look at the CrowdStrike situation, a black eye for CrowdStrike, Palo Alto could benefit from that.
Do you expect to see that show up in the results we get next week?
Not in terms of what we see in terms of results, but I believe as we go into fiscal 25, this is just going to be another tailwind for them. You look at that free cash flow story. This is just what I believe is sort of the second inning of this game playing out for Palo Alto. They are going to be a share gainer. But you take a step back, when you look at Zscaler, Checkpoint, CyberArk, Palo Alto.
I mean, let's pull up valuation on these guys here. Alrighty, let's go to our little new, well, it's not a new tool. We had this for about a month now, our compare feature here on 1000X. And let's go ahead and look up valuation on these guys. So Palo Alto Networks, and then we're going to look up CrowdStrike. I'm trying to remember their ticker symbol. CrowdStrike, there it is. And then the other one, he wanted to Zscaler, he was talking about, right? All right, so let's see valuations on these babies. So trailing 12-month P, Palo Alto 44, CrowdStrike 485, Zscaler has none, right? So forward P is what we really got to look at, in 2-year forward P, because if we're buying these stocks, we're buying them for the future, right? So Palo Alto 60, CrowdStrike, even after the massive crash in the stock, 70, Zscaler 70, 2-year forward P about 50, 52, 53, 51, right? Estimates there, that's 2-year out forward P. So with those stocks, that's the issue. They trade very, very rich. It's not like, sure, they have growth, like they have a multi-year growth story, but it's certainly not like you're getting those stocks for cheap prices, right? I mean, you can get Meta. Meta has a multi-year growth story behind it, right? Check out Meta here. So we go Meta. Meta's at a 21, 2-year forward P, right? And that has a multi-year growth story. So, just some things to consider there. By the way, if you want access to 1000xstocks.com as well as apply for my private stock group, I'll put that as a pinned comment down there today. You can click that and fill an application.
This is really actually just the beginning of really the second, third stages, what I view as sort of this AI revolution. Cybersecurity is going to be a big beneficiary there. So I think as a subsector, could be the best outperformer going into year end.
And something I think that gets overlooked sometimes, you and I have talked about it, is the growing government book of business for some of these cybersecurity names. I mean, you saw it, they're in a different piece of the AI software business, data analytics, Palantir, but you've seen it with Palantir recently as well.
Palantir.
How meaningful is it to be seeing the federal government dole out more of these contracts?
I mean, and we've talked, the 202 area code, it is just a different mojo that we're seeing from a spending perspective. Look, Palo Alto, Messi of AI, you saw it firsthand in terms of what they're doing. Government is now really more and more focused on AI, next generation technology. That's going to benefit not just Palantir, it's going to benefit Oracle, going to benefit a lot of the cybersecurity names like Zscaler, names like Palo Alto. And that is going to be for the September quarter important, especially in that fiscal year end.
Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area. So let's start out talking about some of these small cap stocks. Fubo, SoFi, Cheesecake, right? Can these stocks continue their upward trajectory? Obviously, Fubo is kind of a freak situation there because we have some very favorable outcomes here. We're about to go on to football season. Remember, college football gets kicked off next week, right? And then about 2 weeks after that, then we're talking about NFL seasons here. That's always a boom for Fubo's business model. They start attracting a lot of new subscribers. So that, along with the whole positive ruling, the injunction, I mean, just phenomenal news in regards to Fubo. But what about these stocks in general, right? Well, listen, the Russell 2000, it's a roll tide situation here. I mean, this baby has been rolling and rolling and rolling. And as long as this Russell keeps rolling, these sorts of stocks are going to continue to fly. You know, SoFi, you'll see a $10 plus number on that one, right? Fubo, I mean, if Fubo comes out with a great next earnings, strong subscriber numbers, positive conference call, losses brought down a lot more, this stock will leave this year in the $3 to $4 range. This year. I'm not talking next year, I'm talking this year. But they gotta execute, right? The legal stuff got to continue to move in the right direction, as it's been doing, right? And then they got to come in with strong subscriber number, bring down those losses again this quarter, and you'll see 3 to 4 before we exit this year in regards to that one, right? So as long as this Russell keeps rolling, all these stocks are going to see a lot of momentum. Even like the Honest of the world will see a lot of momentum, right? The Russell's now, just in 10 months, 32% move on the Russell Wilson. Incredible. So there's 3 ways on how this keeps going. I don't know why I put 2 ways there, but it's supposed to be 3 ways on how this can continue as far as the Russell. One is the whole market goes risk on, right? Which is kind of what we saw today. The NASDAQ was up, Dow was up, S&P 500 up, the Russell up, everything was up, right? So if the whole market continues to go risk on here, which a lot of people are not expecting that because we're in August and September, usually bad months for the market. People get scared in October as well. So people are not expecting this market to continue to roll higher here, which kind of makes you think if people aren't expecting that, what's likely to happen? You know, the stock market is usually the opposite of what everybody's expecting is what ends up transpiring, right? So everybody's thinking like, there's no way this market can continue to roll up here. Like, no way, right? If the whole market keeps going risk on, then these small cap stocks will continue to fly a lot higher and the Russell will as well, right? Now, keep in mind, in regards to these, the percentages might not be as big in the future. You might not get a Fubo up 17% a day or SoFi up 6.5% a day, right? But as the stock prices get higher and higher, the absolute number gets more and more powerful. So little food for thought in regards to that I think is very, very important. The second way that this Russell Wilson could continue to roll here is if we have a rotation from big dogs into small dogs. So talking about big cap stocks, big tech, if you see some selling action, some of those stocks, right, that have been tremendous performers for really the past 2 years. If we see some rotation out of some of those and into some of the more small caps, Russell type stocks, that's a potential that could happen there. Remember, you don't need a lot of selling from big tech to make absolutely monumental moves in the Russell, right? Because small cap stocks are so small in regards to their floats, in regards to the size of the market caps of those companies, that if you get some of that big money to come out and go into smalls, the small caps end up rolling way further up on a percentage basis than whatever the big techs went down. So you can see a big tech stock down 3% over a month and just people kind of slowly sell that one. But yet you can see a small cap stock up 30, 40% in that same exact month, right? So if we get rotation, this will continue. Third thing is if we see sideline money come in heavy, right? There's a lot of sideline money out there. And if we see treasury yields fall over the next 6 to 12 months, that could put a lot of buying pressure into the market because people will stop looking at treasuries as much. And if suddenly you get hit with the FOMO of the market, which a lot of people don't feel FOMO in this market because everybody's expecting like we got to go lower here. No way, this can't continue. It's August, like August, September, bad months for the market. October, scary, election, blah, 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 right? If this market rolls into rate cut time, right? Rolls during this time that people are expecting things to be bad, and we see a situation where next thing you know, you're staying unemployment rate in the 4s. We got the Fed start cutting rates here. The market's doing great when no one expected to do great. You could actually get into a FOMO cycle, believe it or not, eventually, right? Which we don't really have that yet. Actually, we don't have that at all right now, in my personal opinion. If you look at the call buying activity out there, the put to call ratio, it's not really screaming like this is like, you know, everybody's got to jump in, it's FOMO time. It's not really saying that at all, just to be quite frank. So you never know. That's a potential, right? And remember, there's a lot of money over there. This is money market funds as of last quarter. Keep in mind that I almost guarantee you that number's significantly above that right now. So, you know, we're talking about $6.5 trillion roughly over there in money market funds. Keep in mind, if we go back 3 years ago, we were at about $5 trillion. 2 years ago, we were about $5.1 trillion. A year ago, we were at close to $6 trillion, a little under 6, let's call it high $5 trillion. Now we're at about 6.5, if not 6.6. The number just keeps going up and up and up. And I wouldn't be surprised if that number peaks here in the next 3 to 6 months and you actually see some folks saying, you know what, let's rotate. And then the question is, what do you rotate into? If you feel like big tech's kind of already had a lot of its move and you want to rotate to something that you see as having the next move, you might rotate some of that money into small caps, right? And you rotate some of that money into small caps, woo, could you be talking about another leg higher there, right? So that's a little food for thought. And that's another reason why the market might have a little bit of a floor underneath it right now, right? Despite all the stuff that's going on out there, is just, I mean, there's just a lot of money over there, like a crazy amount of money. Sitting over there that people are just like, when's it coming in? Now, keep in mind, in my personal opinion, people are expecting like $3 trillion to come over. No. But could we see $1 trillion come over a 12 to 18 month span? I think that's a potential. That's what we're talking about there, right? Speaking about picking choices, AMD had some choices to make, and they made a big choice. $5 billion acquisition of ZT Systems. Now, I want to hear Lisa Su specifically talk about this deal, and she went on CNBC, so I had to watch on TV, maybe a couple hours ago or so. And she was speaking about the deal, and basically this is going to allow, because you're going to understand, Nvidia has it all. Nvidia can put the whole thing together for you, the whole show, from the hardware side to the software side, the whole thing. And AMD's realized more and more, and Lisa Su's realized, if you're going to really compete with Nvidia for the next decade, you better offer everything. You better have the hardware, the software, the systems, the connections, everything, right? It goes back to their acquisition of Xilinx and all that sort of stuff, right? And so she's now positioning AMD to really compete with Nvidia over the long term. Now, is this something that's going to hurt Nvidia's numbers in the next, let's just call it for the remainder of this year? No way. Is this something that's going to hurt Nvidia's numbers in 2025? No way. Is this something that could start having an impact on Nvidia in 2026? Yes. Is this something that could have a more substantial impact in 2027, 2028, 2029? Yes. Okay. So keep in mind, this deal does not mean the demise of Nvidia or the demise of Nvidia stock. You could still see Nvidia this year go to 150, 200. It's a possibility this year. Okay. But in terms of Nvidia, we're going to stack up some problems here that are going to really start to emerge in 2026 and beyond. And so that's probably going to hold the stock back in 25, 26, and in future years, just to be quite frank, because you're going to stack on, you know, a lot of pull forward demand in 24, 25, 23, right? That could hurt 26, 27. And then additionally, with AMD becoming in what will be seen as an actual competitor, because I don't think up until now AMD's been considered like a serious competitor to Nvidia. They just haven't, not on the AI side, not on the data center side. But I believe Lisa Su and AMD, they're positioning AMD to actually be a serious competitor in 2026, 2027, and beyond, right? And Lisa Su has a great history of doing this. She'll position the company, you know, a year or two, and it takes kind of a while to put all the pieces together, and then it positions a company great for the next 5-10 years. She's done that ever since she got hired as CEO back in, 2014. And so bullish for AMD, but not necessarily for the short-term AMD, more for the longer term of AMD. And I don't want to say it's bearish for Nvidia, but it's toward the bearish side for Nvidia long term, right? Which one I'm talking 2026 and beyond as far as that goes. Now that leads me to talk about Estee Lauder. So I got scared. I'm not going to lie to you guys. I got scared. Because this is a stock I just started buying. This is their first earnings report since I started buying it. It's a stock I want to buy a lot of shares of. And all of a sudden I open up the earnings report, and a lot of times my eyes just automatically go down the bottom line right off the bat. And so my eyes just went there, my little artificial intelligence brain just, and I went, what? 79-cent loss versus 9 cents? I said, net loss of 289 or 286 million? I'm like, what? No way. Things are that bad at Estee? I might be screwed in this situation. I got so scared. But it pays to do a little deeper digging, okay? So here's what we actually have going on here. Net sales, so revenue was up 7% for the company year over year. Good. This is a company that revenues had been going down, so the fact that we can, and if you look at the year end, right, revenues are down 2%, so now that they're up 7%, that means the revenue story in regards to Estee is starting to get stronger. Let's freaking go, baby, okay? Cost of sales, down 6%. The holy grail. The holy grail. If you can talk about your revenues up 7% and your cost of sales down 6%, gross profit's going flying, right? Sure enough, gross profit up 14% year over year. Gross margin went to 71.8% from 67.8%. This is phenomenal. As of right now, this is like a grade A income statement. But then we have problems, okay? So selling general administrative, they kept that in check. That was only up like nothing, basically, like hardly nothing, right? So as of right now, even to this line, even all the way down to SG&A, we got a grade A income statement, not an A plus, not enough growth for an A plus, but this is grade A, right? But then we run into a bunch of problems. They have restructuring other charges that was 96 million versus 31 million. They had a goodwill impairment of $291 million. These are like non-cash expenses essentially, right? Impairment of other intangible assets of $180 million. That's what killed their profitability right there. So it made their operating expenses look like it went insane, up 23%. But these are like one-offs. Goodwill impairment of other intangible assets. This is like more one-off type non-cash expenses. I'm not even worried about that. So overall, I had to give the income statement a D. But let me be quite clear. If it wasn't for these little one-offs here, and they weren't little, they were huge one-offs, right? Because, I mean, this would have been a grade A income statement because the net income would have been up insane, right? Because this 290 plus 180, that's what is that? That's $470 million, right? My math right there? 470? Yeah, it should be like $470 million. So, and there's also this restructuring and other charges here that was another 50. So we're talking, it's over $500 million in basically more like one-offs, right? $500 million. So keep in mind, this net income would have been, I mean, it would have been insanely in the positive. Let's just call it that. It would have been insanely, it would have been hundreds of millions of dollars in the positive. But instead, it looks really bad, right? So the moral of the story in regards to Estee, things are actually on the right track in a massive, massive way. And this bodes very well for Estee. Very, very well. And so the way I look at the stock is this is a buy under 120. It's $92 here today. And I would say that it's an aggressive buy under 100. So that's kind of my view. So as long as the stock's under 100, I'm going to be aggressively buying as many shares as possible. I still have to listen to a conference call, likely tonight or tomorrow, and I'll make sure everything's good there, but I can tell you I'm going to likely be aggressively buying this stock. Now, China is weak for the company. So it is something to kind of keep in mind here. China is weak for the company, which doesn't come as a surprise. I mean, we've just been hearing a lot of weakness out of China from a lot of companies. So it's not like it's Estee specific. We just something continuing on. If the Chinese economy gets stronger, man, this is going to be a lot of fun for a lot of stocks, and especially a stock like Estee Lauder. Appreciate you guys joining me as always. Thank you so much for being here. If you're looking to apply, join my private stock group, wealth group, get access to thousandxstocks.com, become a much better investor than where you're at here today. Get serious about scaling up your portfolio, get around like-minded individuals who love to invest. Then click the pin comment down there. You're going to apply to join us in there, and we can see if we can get you in there maybe a little later on this week. Much love and have a great day.